Good.
Good afternoon. Thank you for joining us. I'm Jeannie with Stickney Research, and today here we have Phillipa Leseberg. She's with Windermere, and Warren Stickney of Stickney Research. Today we're going to talk about a subject that is on a lot of people's minds. That is the real estate market. Where is that going? Interest rates and the economy. So we're going to kick it off by asking just a couple of questions to start the conversation. Um, I think top of everyone's mind, certainly Philippa, um, what would you say is the biggest change you've seen in I would I would normally say the past year or two, but I'm saying probably the past 3 months in the real estate market.
Well, I think we can probably start taking a look at the bigger picture first, and then sort of narrow it down to what's happening in the last 1 to 3 months. So let's take a look at from let's say 2020, the median house prices here on the east side were around $1 million. And now they are just over $1.7 million
Wow.
on the east side. So it's quite an increase over 5 years. The interest rates jumped from 3% January of 2022 up to 7%, where they are sort of floating right now. Um, One of the biggest changes that we saw last year in the real estate industry, not specifically related to housing, but also related, and was the fact that buyer brokers are now required by law to sign a buyer broker service agreement with their buyer parties. And so what that means is that it's a contract, and it states that how our service agreement works, and what the um, percentage compensation is required. Now, related to that is the sellers, on the other hand, are no longer required to cover buyer broker compensation, and so um, they can go as low as 0%, or they can do up to 3% or over. We just saw one come through the other day at 4.5%. So there's a lot of changes going on in terms of compensation levels, and um, and I think that sort of most recently, with the sort of the macroeconomic stuff going on, global economics, um, uncertainty in the market, there has definitely been a slight shift of late. So I would say that although the east side is still robust in terms of pricing and pace, there are some signs of strain. And we've noticed that some of our buyers are feeling a bit confused. There's a buyer fatigue to a certain degree, because they aren't sure really what to do and what's happening with their portfolios right now. So I would say inventory is building. That's something that has just been happening over the last few weeks even. Affordability is a concern, because people aren't really sure about what's happening with their portfolios, and buyers are being more selective and cautious. So
Fascinating.
yeah.
Yeah. So if the inventory is starting to come up, one would expect that prices would start softening. And what's happening in the new home building? I was just hearing on the news the other day that the cost to build a home now may be 20% more with tariffs. How is that going to be affecting? How is that going to be affecting the inventory market going up as well?
It's a very good question, and we're not totally sure yet, because we're not sure about the tariffs and what sort of level that's going to be. So it's hard to really give some very clear data around what's going to happen with the new construction market, but it certainly will have an impact. If less homes are being built, then it's going to really tighten up the inventory available.
Okay.
Yeah.
Well, and you also mentioned interest rates. So that is going to probably preclude some people from wanting to buy right away. Warren, tell me, what are you seeing? What are you hearing from the economist about interest rates? What can we expect?
It's a real challenge because mortgage rates are more based on the 10-year than they are on the overnight rate that the Fed sets. And what's happening in the bond market right now is complicated because the way tariffs actually work is we go and buy a bunch of stuff, for example, from China. And what China does is turns around and buys US treasuries. That drives down interest rates. when we start to freeze up the market through tariffs and slow down trade, that's less buyers. And if there's less buyers, then interest rates will tend to rise. And so, where normally what would happen is you would expect is the economy slows, which eventually it will, the Fed lowers rates, mortgage rates come down. But what we saw before that got us to a 3% rate was the Fed actually buying mortgage-backed securities and buying, a total of 6 trillion on their balance sheet. So I don't see interest rates getting back down to 3% again, but certainly I could see them down. I think where most of us would be happy is a 4.5 or 5% rate.
For sure.
Would be a healthy rate.
Yes.
I
Yeah.
just don't see that, in the time being for quite a while until we get some of our trade issues, and that's before, the crisis that we have really of where our national debt sits and what's going on with Doge, which was supposed to be bringing in a phenomenal amount of revenue, and not only is it not, but today they announced that they're letting go 6,000 IRS agents and ending all audits for high net worth people, which had 250 billion slated to be collected. That now the IRS has said we're not now expecting we're going to be able to collect that. So anyway, we are in a very tumultuous time. And so I think with interest rates, it's really a crapshoot.
Yeah.
Yeah. Well, the market had priced in back at the beginning of the year, I think 3 rate cuts. And right now they've said we don't see anything. Is that correct?
Well, I think they're down maybe to 2, but now there's a battle where Trump wants to fire Powell, and the question is whether legally he can. And what the market hopes for, and I think what is on the backdrop of everybody's mind, is stability and knowing where things are. So, I mean, a home purchase, I think, is one of the biggest purchases people make in their lives. And, just as we've seen a freeze up, basically with corporate America, what we're seeing is when things get crazy foggy on the road, you pull over.
Right.
And that's what corporate America is largely doing with buying decisions, looking for clarity. And I would not surprise me at all to see that trickle down. But then again, there are always people that have to move. And so I think what we could concentrate on is those that may either want to be buying a vacation home to escape maybe some stuff that they're not happy with, or that have to move for relocation or family purposes. We can focus on that.
Yeah. Are you seeing a lot of clients requesting more information on how do I pull some of the equity out of my home? Should I refinance? Or, how do I get a loan that I don't have to pay an arm and a leg for?
Some, I mean, less, I see less money coming out for just the sake of pulling it out. But if it's to buy a vacation home, right, or to buy a home in a different jurisdiction, then certainly, and they are stunned when they look at interest rates. So I mean, everybody remembers this 3% rate, which was not a real rate. And so now we look at ways and fortunately have some available programs through, some synergistic relationships we have, where at least we can get the rate down, maybe interest only to 5 till things cure, which eventually in the market, everything is cyclical. And so that's what I have to remind everybody of. It's like,
Sure.
cyclicality, things will come down eventually.
Yeah. And Philippa's, Warren mentioned that it is the biggest asset for a lot of people, especially here in the Pacific Northwest where the prices are so much.
Yes.
Tell me, how would you recommend if someone does have to sell their house, or they want to sell their house, they want to say downsize or move somewhere else in the country? What's the best way to posture their home for sale in today's market?
I think one of the most critical elements right now is pricing the house right. For sellers that have unrealistic expectations in terms of what they can get for their property, they're going to be the ones that struggle the most. But it's really important to get a good realtor. That's critical, because you want someone who's going to be, upfront with you and really discuss all the current market conditions and what they need to do to prepare their house for sale. Now, Depending on the individual property, it can take anywhere up to 6 months. Let's say, a few weeks up to 6 months to prepare the house for sale. Depends whether they want to do updates and upgrades and renovations and so on. But certainly for the buyers are looking for, where possible within their price range, homes that have had their bathrooms and kitchen updated. They want to see new flooring. They want to see good landscape in front and back. And maybe, the fence is looking solid, and the deck, perhaps the tracks deck. So these are the types of things that we talk about with our sellers in terms of what they can do. And certainly fresh coat of paint, interior and exterior, always helps as well. But it depends on the individual party's situation. They may not have a lot of funds for that. And actually, we do have a program at Windermere where they can get, tens of thousands of dollars towards upgrades and updates, if they would like to go that route. And
That's
they pay, that's exactly, and then they pay at the time of closing. So for a seller, pricing the home accurately and getting it into as pristine condition as possible, so that the buyers are really attracted to buy the home. And if you price it well, even in the current market, we're seeing quite a few multiple offers. In fact, over 50% of all the 54% currently of all the homes on the east side are receiving multiple offers, and the price is going above list price.
Wow.
I know.
That's interesting.
Yeah.
That's fascinating. I wouldn't have guessed.
Yeah. And another 20%, which is still a big chunk, is selling at list price. And then the rest,
that's great.
the remaining 30% is below list price, or after a price drop.
So where does that leave a buyer who, they say, I'm one of the multiple offers? How do you if you are representing the buyer, how can you assure that their offer will be the one? And how do you set a realistic expectation for them as well?
That's a very good question. And, my business partner and I, we like to think that, we're really on top of the negotiations. There's so many different elements of submitting a really solid offer. But certainly, if people have it, cash is always king. So that being said, certainly that the least number of contingencies is super helpful. Just writing a really solid offer. Being willing to escalate, if they have the financing. So for buyers, it's really important when they start looking to be ready. So on one hand, we say, you may have to be patient to find the home that you're looking for, but we also warn them that they might find it on the first day out, and that happens quite a bit actually. So we want to make sure that they're ready to jump on an opportunity if it comes up. And in terms of multiple offers, sometimes it's difficult, because you'll have, between 2 and a dozen or so people going for the same home. But yeah, I think with some massaging and working on the offer and contingencies, we can often see them win the bid.
That's great. And you touched on a point of cash is king.
Yeah.
And it just made me think about, using a securities backed line of credit that is sitting on so many of our clients' accounts. When we open up accounts, we automatically attach that. They don't have to use it right away, but they've got it there if they need it. And it's money that they can access quickly, which it sounds like that's the biggest thing for a buyer right now.
It would be, yeah.
Yeah. So, if someone is selling, switching back to the seller again, they're getting ready to sell, and the real estate prices, as you've mentioned, from 2020 have gone up so much. People have gains on that. And Warren, can you speak about some strategies that you're seeing that we can help mitigate the tax that's due on those sales?
Yeah, of course. So for a single person, the first 250,000 of gain, if they've been in the house 2 of the previous 5, is exempt. And if for a married couple, 500 is exempt. And then beyond that is just ordinary capital gains rates that trickle into the whole rest of the tax return and can get as high as 23.8. And it might trigger more taxes on other parts of their plan. So what we'll often recommend doing is putting part of the house in a charitable trust. So we've got a client now, for example, where they've got $1 million of gain on a 2.6, $1 million sale.
Yeah.
And if they put, say, 400,000 of the house because of what they, paid for it, and the way that the offsetting deductions work, they can eliminate the capital gains tax altogether.
Wow.
And so, it's incrementally not that big of a contribution for them to make, and they still then retain the money, can live on the money in retirement. What they haven't used up by the time they die goes to charity,
Mm,
but puts them in a far better position.
yeah.
So
for sure.
that's kind of one thing that we would often recommend. The other thing can be, if they've got kids that are in far lower brackets, is to as well potentially have the house jointly owned, give a little bit to the kids, have the kids, some of it in the kids' names, if their intent is to have money go to the kids anyway.
Mm,
So when they sell, that the kids are then paying tax on the gain as well. So there's a lot of different ways of structuring it. But what I always say is you should be talking to a competent realtor and to us before you get to that point, because what drives me crazy is with like a client that came to us, that sold a property over on Lake Chelan for like $3 million with 2.5 million in gain.
oh boy.
And then lets us know about it after the fact. And I'm
Oh.
like, there's very little that can be done later.
Right.
So
Yeah. And with the charitable trust, the element you had mentioned, they get the deduction. They don't have to pay that tax, and they can have income to live on, and whatever is left over at that point goes to charity.
exactly.
Yeah. So
It's really having your cake and eat it too. So,
yeah.
structured right, you create far more family net worth and far more family value by using that than just paying tax.
For
So,
sure. Yes.
Yeah. That's
And I
fantastic.
think that's a barrier too, because a lot of times people get hung up, I think, in the wrong part of the transaction, right? They don't want to sell
Yeah.
because they've got a gain and they haven't really analyzed what the gain is or their options.
Right.
So I think that's always compelling too, if we can make that happen.
Mm.
And the new state capital gains, that is exempt?
Real estate's exempt at the moment. But with all of this, it trickles through on tax returns as well into alternative minimum tax, where even the $500,000 exemption goes into an alternative minimum tax calculation. So we always want to run the numbers and just say, where is it really going to sit? Because I think it's helpful for people to know and not be surprised at the end.
Yeah. And you mentioned, give advance warning, plan this out. Is there, I understand that from your perspective, for the best time to sell, what's the best time to sell? Is there a particular time? I know usually, before summer,
Spring, right?
spring. Is that still the case?
Yes, I would say if we're talking just straight seasonality, spring is always going to be the best time to sell. Now, there's some sort of distinctions within the spring season, and that would be, so for example, inventory is tightest right after the holidays. So let's say, January, February, and even getting into March. So let's say February, March, where you're going to have the best opportunity to sell your home if there's some issues surrounding it, let's say, because the demand outpaces the supply. So buyers can be potentially a little bit more willing to accept the fact that the house is under some major power lines, or it's on a busy road, or it's straddling the highway. Yeah, exactly. So that's a really good time to sell something that you might be a bit concerned about how long it's going to sit on the market.
Yeah.
Would be February, March would be the best months. Now, if you have what we call a cream puff, which is a beautiful home, it's been updated, everything is really dialed in, and you're fairly certain that it's going to be selling quickly, you might want to hold off slightly, maybe sort of May, June even, where because when you've got demand outpacing supply, that there's upwards pressure in the price, so that by the time you get to May or June, now you're already sort of floating at about where it's going to be, and you can use that gain and just enjoy selling your cream puff and you're all set to move on to your next chapter.
It's fantastic. Great. I wouldn't have thought
Yeah,
that. That's
I wouldn't have
interesting.
either. That's,
Yeah.
that's super helpful to know.
Yeah. Is there anything that you all would like to cover? Any other questions that you may have of each other regarding economic impact or real estate that we haven't covered so far?
Not real questions. I think one of the things that's neat to be aware of is this financing. So there's, when you get into high interest rates, a lot of times things freeze up,
Mhm.
and there is relationships we have where there are mortgages available that are either interest only or regular conventional mortgages, where even though the mortgage rate may be high today, um, with a small fee, they will actually just redo the interest rate on the note and not redo the note. And the significant part about that is not starting all over again.
Right.
So, I mean, everybody's heard that, of course, you can refinance and go back and find your high school diploma and all the paperwork required.
Yeah.
But if you've gone through that hassle once, it's awfully nice to just be able to go in and say, here's a fee, change the interest rate, and you can do that every year as interest rates eventually come down.
Mhm.
So I think that's a compelling thing that people should be aware of. And of course, there's some parameters around it, but makes a lot of sense.
Yeah.
Well, and I think too, they also do construction loan conversions over to, back in the day, of course, you saw those. They're probably have dried up a little bit, but they also do the construction conversion to a regular note, which is helpful because the financing has changed, right, over the years, for sure.
Yeah.
And yes, that the financing will be in flux. And when you find, are a lot of buyers buying with cash, or do you find a lot of buyers that are still financing?
I would say the bulk are still financing. Yeah, not everybody has the luxury of being able to purchase with cash. If they can find a way, that's certainly, advantageous in a multiple offer scenario. Yeah, I think, you were talking about, driving in the fog, you pull over.
Yeah.
And I would say that that's one of the critical elements that we're facing right now is just the buyer confusion. And I think it's really important to get a really solid relationship with your realtor and make sure that you talk about everything, and have conversations with folks like you that can really help with their, management and planning aspect. And we're always encouraging our clients to have those broader conversations with their CPA and with planners and so on. Even more critical right now because we don't know exactly what's going to be happening in the near future.
Sure. Yeah, that makes
And
sense.
one of the things you brought up that I love to touch on with clients that just believe is it drives me crazy when you've got a client that lives in a house with like green shag carpeting and then comes to the selling time and suddenly everything gets redone. And so my advice always is, why don't you enjoy it for a few years?
Yeah.
Or if anybody that listens to this as parents, why don't get some enjoyment out of it? Because if it's totally outdated, it's going to have to be fixed up to be sold anyway, right? So
Right.
why not enjoy it a bit?
That's a good example. I mean, I had that situation with a home that I purchased in Kenmore. I was living there for 5 years and decided to update it and then decided to move into an investment property. But once I saw how amazing it looked, I was tempted to stay myself.
So, right.
So even when we're in the industry, we still come across these same questions and scenarios.
That's funny.
Well, good. To me, it just makes sense, right?
Yeah.
When you mentioned that, I thought, enjoy it a little bit.
Yeah.
Yeah, that's great advice. That's great advice for all of us to take for sure. Well, I appreciate both of your time today. And this is being recorded so that we can go ahead and pass this on. Some of the information may be outdated a little bit, and feel free to, of course, contact us. We're happy to have one-on-one conversations with anyone who has questions. Thank you very much for your time.
Thanks for having
Brilliant.
us.
Thank you.
Thank you.
Thank you for your brilliance.
Yeah, thank you.